Hey everyone, and welcome back to another video for today. So the market continues to recover, so am I. So I'm pretty happy with what we're seeing right now. A lot of green across the board. If we look at the companies and the particular stocks that are up the most, we can see the following thing. We can see AST is up 5%, Iron's up 5%, CoreWeave, Nebius, Alibaba. Every single stock here is green. Even PayPal is green, another 1.8%. Though we do have some PayPal news we need to discuss. We can actually look at the names that are not green, which are Rocket Lab. There is a specific reason for that. We'll talk about that. Intel is down 1.5. That's because Mobileye already reported their quarterly figures. There was a slight miss. Intel will report after the market closes. Oscar is down a little bit, and so is Micron for once. And so in today's video, let's talk about Rocket Lab. Let's talk about PayPal. We have some interesting data from, again, Google, Gemini, and also a GDP number and some other macro data. And then I do want to talk about Adobe. All right, let's start off here with the US PC inflation data, final one for Q3. PC price index up 2.8%, forecasted number was 3.5%, previous number was 2.8%. PC price index year over year increase, the first one was quarter over quarter, 2.7%, previously also 2.7%. As for the jobless claims, 200,000 for the week January 17, forecast was 210, and the previous one was just under 200,000. As for initial jobless claims, 4-week average, that's 201.5 thousand. The previous one was 205,000. As for third quarter GDP number in the United States, that has been revised and it's now at 4.4%, previously 4.3%, which again is a pretty good number to see. And you can see we've been recovering 4.4%. Let's see what Q4 gives us. But yeah, I mean, so far, so good, which of course means that we should not be expecting any extra rate cuts anytime soon. Fed meeting is actually next week on Wednesday. Probabilities of a rate cut sits at, I think, lower than 5% at the time of recording this video. Now, before continuing, if you enjoy this type of videos, of course, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also special thanks to fiscal.ai, but more on them in a bit. Going back to Rocket Lab here, so they deliver mission success on first launch of 2026 for new customer Open Cosmos. And this is the 80th Electron launch overall. The first one of the year is again a big success. Now you might say, okay, so why is the stock down? Well, it's not because of this, but it is because of that thing right here. So they gave us a little update on Neutron. So they said the following thing. As the company pushes Neutron to its limits and beyond to qualify its systems and structures for launch, qualification testing of the stage 1 tank overnight resulted in a rupture during a hydrostatic pressure trial. Testing failures are not uncommon during qualification testing. We intentionally test structures to their limits to validate structural integrity and safety margins to ensure the robust requirement for a successful launch can be comfortably met. There is no significant damage to the test structure or facilities. The next stage 1 tank is already in production, and Neutron's development campaign continues while the team assesses today's test outcomes. The company intends to provide an update on the Neutron schedule during its fourth quarter earnings call in January. So the stock is down. Well, it was down a little bit more than 5% before the market opened. Now it's down 2-3% or so. I mean, Neutron is still scheduled for now for the first half of 2026. And if something changes, then they'll let us know. And of course, again, I do think that the stock is quite expensive right now. A lot of things are already baked in. Is this a no-brainer dip to buy? Honestly, no. Moving on to PayPal. So PayPal is going to acquire a company called Symbio, accelerating agentic commerce capabilities. Now, Symbio is a multi-channel orchestration platform that helps brands sell across agentic surfaces, including Microsoft Copilot and Perplexity and other e-commerce channels. We know that PayPal is really pushing for that agentic AI shopping experience. PayPal agentic commerce services and checkout options are available for merchants on Microsoft Copilot and Perplexity with OpenAI ChatGPT and Google Gemini app and AI mode coming soon. Now, as part of PayPal's Symbio's team and technology, that will enable Store Sync. And by the way, PayPal had already partnered with Symbio before. Symbio did raise money through PayPal Ventures, so I guess they liked what they were seeing, and so they acquired the company. I don't think it cost that much. So, as part of PayPal, Symbio's team and technology will enable Store Sync, one of PayPal's agentic commerce services. Store Sync makes merchants' products data discoverable within AI channels, and it includes the ability to seamlessly drop orders to their existing fulfillment and management systems. Importantly, merchants remain the merchant of record and retain customer relationships and control over their brands. A couple of names here: Abercrombie & Fitch, Fabletics, Ashley Furniture, Newegg, and Adorama are currently live with Store Sync on Microsoft Copilot and Perplexity. Now, again, the question remains is, are they seeing any success? Hopefully we do get more data. Maybe I think it's a bit too early right now, but maybe mid 2026, end of 2026, I would love to see data about agentic AI shopping experiences and all of that. Lastly, before we dive into Adobe, we look at, of course, generative AI traffic share. 12 months ago, ChatGPT had 86.6%, Gemini 5.3%. Well, let's fast forward to today, and we can see that ChatGPT dropped to 64.6%, and Gemini is now at 22%. A month ago, that was 19.5%. Gemini continues the huge success and momentum that it has, and I'm not going to be surprised if a month from now, they are, again, going up and up. All right, moving on to Adobe here, and again, Fiscal.ai, there's a link down in the description and in the pinned comment. You'll get 15% off. New users will get Fiscal Pro for free for the first 2 weeks. All the data that you will see is powered by this platform right here. So as you can see, over the past 5 years, Adobe stock is down 37.7%. It's currently experiencing a drawdown of around 57.3%. I mean, if you look at the last time they reached all-time highs, that was in 2021. Since 2021, this stock has, well, reached close or was close to all-time highs only twice, and that was in 2023. So right now what we're seeing here is this. This is a company worth $119 billion with a trailing PE of 17.4 times and a forward PE of 15.2 times. Margin-wise, incredible stuff. So what's the problem? Now, if we look at a couple of pricing metrics here, we'll start with the trailing PE one. As you can see, we are well below the, what is it? Let's do almost 10-year mean, 10-year average. Okay, well below it. The average 47 times. Forward PE also well below the 10-year average. If you look at forward price to free cash flow, 11.7 times, the average here 27 times. And then if you look at price to sales, 5.1 time, average is 12, and forward price to sales is also much lower than the average. So what's the problem here? Why is this stock so cheap? If we then go and look at margins, what do we see? Operating margin, 36.6%. If you don't know what this drop right here is, same with free cash flow. That was basically the penalty that they had to pay for not acquiring Figma. So there was 1 quarter where this thing fell here to 17.5%. Same here with free cash flow. So that impacts, of course, the last 12 months metric that we're looking at right now. 36.6% is almost at all-time highs for operating margin. Then if we look at free cash flow margin, that did drop a little bit. We're now at 41.4%. The peak was, well, this was again one-time thing, peak was closer to 43, 44%. Gross profit margin, closer to 89%. Net profit margin still around 30%. And then if we look at cash from operating activities, we are now, for the last 12 months, just above $10 billion, and that thing has gone up and to the right. Now, if we look at the following thing, we can see this is the market cap. So market cap, of course, peaked when the stock peaked, market cap peaked, and now we're at here $122 billion or so. Now, previously, what you can say is, okay, market cap goes down because we're seeing that free cash flow doesn't really grow anymore. And then here as well, market cap goes down after the failed Figma acquisition, plus free cash flow did drop. But you cannot say that revenue dropped because revenue kept on going up and up and up. That's the blue bars right here. So what's the problem? Well, we've seen that with Duolingo yesterday. If you missed that video, that will also be in the top right corner. Well, the problem or the explanation is probably this. Previously, and here if we look at price to sales and price to earnings, we can see that previously it did get a higher multiple from the market. Why is that? Because revenue growth was just higher than today. Today we're sitting at around 10.5% or so. Previously was well closer to 20%. And of course, if you grow 20% and not 10%, you deserve a higher multiple. That's not all. If you look at the analyst projections right now, they are projecting that they will grow less than 10% over the next, well, each fiscal year over the next 3 fiscal years. Fiscal 26, 27, and 28 is actually only at 7.9%. If we're looking at free cash flow, again, it's not the best out there. Fiscal 26, only 4.1%, then 9.2% in fiscal 27, and 5.8% in fiscal 28. But if you look at remaining performance obligations, last quarter, we can see that it is growing faster than revenue, which could be good signs for what to come. Slightly faster, 12.8%. Now, again, Adobe is a very profitable business that is still growing while it's been priced a bit unfairly right now, but there are reasons, the reasons we've just gave. If we look at total subscription revenue, that is still growing, what is it, 11 or so percent consistently. If we look at the digital media ARR, also 11.5% was the last number that we got. 11.5% growth year over year, and that continues to go up. And to the right, the growth rates, yes, are slowing down a little bit. But the main reasons to me, I think right now why this stock is, let's say, being punished is one. Of course, the fears that AI could replace the whole of the creative cloud ecosystem, which I don't think it will. Competition from Canva. Yeah, Canva, Apple, things like that, maybe. But I do think that the majority of the issues comes from this, from the declining growth rates and of course the multiple compressions. Because remember, you might not be a fan of Adobe. You might be using Canva, you might be using Affinity, you might be using Photopea, you might be using some other stuff out there, DaVinci Resolve, you name it. But if we look at facts, fact is 99% of Fortune 100 companies have used AI in an Adobe app. Nearly 90% of Adobe's top 50 enterprise accounts have adopted one or more of Adobe's AI-first innovations. Over 40% of Adobe's top 50 enterprise accounts doubled their annualized recurring revenue spent since the start of fiscal 2023. These are, of course, huge brands. Coca-Cola Company, Estee Lauder, Henkel, IBM. I mean, you name it, the list goes on and on and on. So it's more about enterprises using Adobe. Of course, a lot of the creators are still using Adobe. A lot of the people on YouTube are still using Adobe. Now, of course, a lot of people might not like it, but they're still using it probably because, well, their customers are using it, so they want it in a specific format, and so they have to use Adobe. Okay, but hey, if everybody's using it, even if they don't like it, I guess it's still good for the business. Now, of course, there are some things that Adobe could improve. I think they should be improving a couple of things, and I believe that with AI, they could be moving much, much faster. I think with the video editing stuff and all of that, I think things should be moving much quicker, simple stuff as well. I also believe that if you look at Canva, for example, Affinity by Canva, right? It's very simple. With Photoshop, sometimes things are maybe a bit too complicated. Also, you can compare Canva to Adobe Express and all of that. Canva is very, very simple and it works, right? And so there are definitely things that Adobe can do. You might say, oh, they have to disrupt themselves in order to survive. Well, again, I don't think they are not surviving right now. They are still very, very profitable. They're still growing, although growth currently is expected to slow down. Remains to be seen if that will be the case or not. And so, yeah, if we look at the stock, it's not the greatest picture out there, of course. All-time high here, 2021, down 57%. Number 2 spot, down 53%. Previous bottom, I would say, around these prices was $275 or so back in 2022. Right now, we're looking at a small rebound here at around $290 or so. This is on the weekly. If we look at the daily, on the daily, we are, of course, oversold right now. We are seeing a small rebound here. me actually zoom in on that. Small rebound. We'll see if that will survive. Of course, their earnings report, we have time. It's the start of March. And so all in all, when we look at these types of companies, whether it's Adobe, whether it's Duolingo or any other company out there, just because the stock was trading or was given a PE of, let's say, 15 times, 20 times, 25 times, doesn't matter, before, does not mean that today it automatically needs to get the same multiple. Because if before they were growing faster than today, then today they do not deserve the same multiple. That does not also mean that the stock isn't undervalued and cheap. No. I mean, based on the information that we have today, Adobe is a cheap stock. Now, as I end this video, the market here, as you can see, compared to when I started the video, it's a bit more mixed, although we are still seeing quite a lot more green than red. Why is Meta green so much? I believe they are going to start monetizing Threads. So expect some ads on Threads, which, I mean, it was expected. So let's be honest here. Anyways, that's all I've got for you in today's video. Hopefully see you tomorrow. And if not, well, have a great weekend. Bye-bye.